first, before we get into Apple specifically, how are you even modeling fair value for all of the stocks in your coverage, given we don't know what the revenue hit will be, we're not quite sure what the cut in expenses will be, and we have no clue what earnings might be? How do you even start to think about what fair value could be for many of these companies?
Yeah, thanks, Taylor, for having me. And it's a great question, especially in these trying times. It's kind of really difficult to have a good forecast, especially given the fact that even when companies like Apple and Microsoft, seen in the semiconductor space, companies like Applied Materials, Lam Research, all of them withdrawing their guidance. And if the company themselves are struggling, it's very obvious that a lot of things are in flux. So I think what we do is kind of like one of the things that we did when we did our Apple analysis is you kind of like the virus started impacting the numbers for Apple probably sometime in the month of February, i.e., they were one third into the quarter. So we kind of had a little bit of a baseline and then tried to like forecast from there onwards. We do look at like, some of the supply chain field work and what's tracking there and try to get a sense. But the bottom line is you're absolutely right. It's extremely difficult to put any kind of forecast. And in fact, when we update our model, for some of the semiconductor companies in the coverage, when they withdrew the guidance, first question from investors is like, what is the thought process behind it? And it clearly is obvious that no one really has an idea. So your guess is as good as mine for a lot of cases. But at the same time, we try to like, do like our best fundamental analysis as much as possible.
Krish, I can pretty much guarantee your guess will always be better than mine, but let's save that discussion for another day. Within your universe of semiconductors, the SOX index today posted an almost 12% gain, one of the best days now since 2001. How much of some of the semiconductors in your coverage are you optimistic that China is coming back online? But then how do you think about the demand perspective here as the U.S. is now shutting down?
Sure. I think, when you look at calendar Q1, the March quarter, a lot of the issues there were supply chain related or supply related. I think now with China coming back online and some of the supply chain slowly ramping up, despite some shutdowns still in Malaysia and Philippines, at least the supply is improving marginally compared to a month ago. So now the real focus shifts to demand. And I think demand is where people are struggling, trying to figure out how the consumer demand is going to be in an environment when a lot of consumers are losing their job and how other things are going to look like. But the flip side of the argument, I would say, is that there are certain pockets of green shoots, especially in the semiconductor environment, in semi equipment. China as wants to be a semiconductor powerhouse down the road. They are still spending. There are certain pockets. If you look at the big picture on tech, hyperscaler data center spending is still pretty strong, even though things like smartphones are still pretty weak. So I think it's all over the map at this point. But the one thing I can tell you is that when you talk to people in the industry, one of the inherent assumptions at this point is, hopefully the duration of the virus peaks sometime in Q2 and things start returning back to normal in the second half of this year, i.e., demand starts coming back in the second half. And if that gets pushed out, obviously there's more risk to numbers. But given where the stocks are and seeing how much the stocks are down in the last month or the last couple of weeks, any company that withdraws guidance or anyone who's going to miss numbers, it really doesn't matter at this point.
Krish, do we get to the point where any kind of surprise is an upside surprise in terms of, some positive numbers perhaps coming out of China when it comes to retail sales, for example, really being taken well by the market? Because, you look at the shutdown in China and people were still buying, right? All of it moving online, and albeit they were buying different things, clearly they weren't buying cars or, furniture, for example. How does, I guess, the return to work change the consumer behavior in terms of, do you expect consumers to still be buying smartphones even when there is this global rush to hoard cash?
Yeah, tough question to answer depending, because the consumer sentiment obviously is going to vary. What I would say is if you look at what has happened, what started as a supply issue in China has morphed into, right now as we speak, a potential logistical issue, given the fact that transportation and logistical issue, because there are places that have, like, I'm based in San Francisco, we have a shelter in place, and there are things like that where people are not allowed to go outside, or do like you're expected to work from home, and then eventually the market is looking forward and it's going to translate into a demand question and a demand issue. And I think at this point, if you look at it and say, if you're looking at purely from a consumer spending metric, yeah, there are some risks to that. If you're looking at more from enterprise spending, it might probably not be as bad, especially given some of the tech companies are still cash rich, and many of them are actually, I would say, scaling back buybacks and trying to conserve cash. But at the same time, like I said earlier, if the demand does snap back in the second half, i.e., the virus is a short-lived issue and the duration and it peaks out sometime over the next several weeks, I think then we're okay as we exit this year.
Krish, what are the strongest and most vulnerable names out of the semiconductor space in terms of those that will be able to maintain debt payments and won't have to curtail dividend payments?
Yeah, I mean, we had a report out last Friday where we looked at the whole complex, and I would probably say that given in our coverage, we feel pretty good about most of the companies in our coverage. In other words, these are companies which have tremendous value add to the global economy. Many of them have a good cash flow. Many of them have good balance sheets. Even though some of them have a net debt position, we don't see a lot of liquidity risk. Definitely not any solvency issues, and very minimal liquidity risk. I feel like what they would do is probably scale back the buybacks, still, not cut the dividend at this point. So our view is that, we don't see anything tremendous or horrific happening in the semiconductor equipment ecosystem. The good news is many of the companies we cover are going to be around 5-6 years from now or 10 years from now, versus some of the more consumer-centric companies people are looking at and worrying about many of their capex and liquidity issues. But we don't see anything in our complex.